Good evening, ladies and gentlemen. This is Barry Norman on behalf of Trade12.com, who is sponsoring tonight's class in Profit in Gold, and our class is powered by Investing.com. So give Trade12 a chance. Sign up for a demo account. They are the world's leading online trading platform provider. So go to www.trade12.com for a fast, simple, and safe way to trade. They are a regulated provider, and you'll be trading with one of the most well-known providers in the marketplace. And tonight's class, as I said, is powered by Investing.com, and I am Barry Norman on behalf of both Trade12 and Investing.com. And welcome to our class, Profiting in Gold. And tonight we're going to talk about gold. We're going to start out with the basics because a lot of people don't understand. They get involved in trading gold, but they don't understand the whole background of gold or the different ways in which you can trade, buy, invest, or own gold. So before you think about trading, let's talk about several important points to remember about gold. Notably, the fact that it is a safe haven asset. Gold is one of the places that people run to when there is geopolitical stress or markets are crashing. It is known as a safe haven, along with like the Japanese yen and the US dollar. There are certain places where people move their cash. Gold is one of those places that in an unsafe environment, gold is sought out for safety. So since capital typically flows into equities, treasury, fixed interest-bearing accounts, or gold, there's a massive redirect of resources when a risk-off approach is adopted to equities. In other words, right now the world is worried about North Korea. They're worried about Mr. Trump. The equities market is way too high in the U.S., and we may see a government shutdown in the U.S. So we should see gold typically rising during a period like this. Now, while you don't eat it or drink it, people are just attracted to gold. It's been used as a currency or a trading commodity for hundreds and hundreds of years. But if you think back, natives 1,000 years ago were using gold, wearing gold, and attracted to gold. It's been used as a currency because it doesn't corrode. This is one thing that people don't understand. This is one of the reasons why sailors, traders, pirates all adopted gold hundreds and hundreds of years ago because it didn't break down and erode. So you could take this piece of gold and hide it away, and it wouldn't. You could then use it later, and then gold became a trading value because gold was gold is gold. So whether you were sailing in Africa or sailing off the coast of South America, if you had gold, you could trade it because a gold nugget had a weight and had a value. But that wasn't the reason why people buy and sell gold. The reason people buy and sell gold is creates the demand and supply may be pure speculation or acquiring and distributing physical gold, hedging, or commercial applications. Because gold on the whole is used in very little. I mean, outside of jewelry, there isn't much of a physical demand for gold. So if you have a preference to trade gold and desire to do so successfully, then essentially you must develop your trading mindset so that you can implement quality decisions over a considerable period of time. The importance of mastering the skill cannot be understated. This is because you will need to react in a professional manner to the many involved conditions that the gold trading environment is capable of generating. Under such circumstances, you will not possess the luxury of allowing your hunches and gut feelings to influence the process of your trading decision. One of the reasons that gold is not a great product to speculate on or because newbie traders, because gold is expensive. So it requires a large amount of investment. It's not like buying 1,000 euros, and 1,000 euros are worth, $1,009 today, or 1,000. Because just 1 ounce of gold, one tiny speck of gold, is $1,300 at the moment. Now, instead, you will need to remain focused at all times without allowing yourself to become distracted by any internal or external stimuli, no matter how enticing. Experts expert consensus explicitly stresses that trading gold successfully requires a business approach and a professional approach. Because we are attracted to gold and because gold is affected, gold doesn't have an actual value. It's only worth what we're willing to pay for it. Now, it is affected and it gets lots of headlines. Every time the Federal Reserve says something, every time Mario Draghi says something, every time Janet Yellen says something, anytime anything goes crazy in the press, anytime you see economic stress coming, there are so many factors that have a direct effect on gold that you have to be ready to not panic. You have to be ready to understand exactly how each one of these factors will affect it, and also be able to deal with something trading in such large amounts. Now, as such, your primary objective must be to ensure that your account balance is fully protected from the high levels of volatility that gold trading can create. By doing so, you will then minimize your stress level, which will enable you to trade in an objective manner. In particular, you must take steps to safeguard your equity from margin calls, because gold can move a lot of money. You know, if the euro moves, it moves in pips thousands of a point. So if the euro soars today or falls today, it might move 40 points. That's, all those digits to the right of the decimal point. Where gold moves $40 a day, and gold's notorious for moving $25, $30, $40 in a day. That's a lot of money. $40, not pips. Okay. These traumatic events occur when you overtrade and subject your account balance to excessive levels of risk. In the worst case, your account balance could plunge to zero and forcing your broker to issue a margin call. Under such circumstances, you will then witness the automatic closure of all your active positions. Okay. So gold is something you need to be careful about trading in because it does trade in large numbers and high volatility. So since the dawn of time, gold and silver has been recognized as valuable. And even today, precious metals have their place in your investor's portfolio. But which metals is best for investing purposes? Now, a lot of people that don't have a large account balance, they can't afford one contract of gold. If you're trading options, is 100 ounces of gold. 100 ounces of gold at today's rate is about $129,000. $1,293, $129,000 of an investment. Even though you can get it on margin, that's still more than most people's houses are worth. So a lot of people may want to consider trading in precious metals might consider silver, because silver trades in tandem to gold most times, but is a much lower value. But let's start out with the granddaddy of them all, and that's gold. Gold is unique for its durability. It doesn't rust or corrode, its malleability, and its ability to conduct both heat and electricity. It has some industrial application in dentistry and electronics, but we know it principally as a base for jewelry and as a form of currency. Otherwise, there's virtually no demand for gold except in the gold markets. The value for gold is determined by the market 24 hours a day, nearly 7 days a week. Gold trades predominantly as a function of sentiment. Its price is less affected by the laws of supply and demand. This is because new mine supplies is vastly overweighted by the sheer size of above ground and hoarded gold. To put it simply, when the hoarders feel like selling, the price drops. When they want to buy, the new supply is quickly absorbed. There's not enough gold produced, and we don't look at it. It's one of the few commodities that isn't based on supply-demand factors. Okay. Now, what it is based on is systematic financial concerns. When banks and money are perceived as unstable and in political instability is questioned, gold is often sought out as a safe store for value. Another one that has a big effect on gold is inflation. Gold is a storehouse against inflation. When you see inflation going up, lots of the wealthy buy into gold. Okay? Because gold doesn't reap any interest. Okay. What it does, it usually stays pace with inflation. So if inflation's going up and up, and if inflation's at 4, 5, 6%, usually the price of gold is marching along with it. So it is a hedge against inflation. When real rates of return in the equities, bond, and real estate markets are negative, people rarely flock to gold as an asset that will maintain its value. And lastly, we have our geopolitical crises. War and political upheaval have always sent people into gold hoarding mode. An entire life's worth of savings can be made portable and stored until it's needed to be traded for foodstuffs, shelter, and safe passage to a less dangerous destination. So let's look at some of the options that we have to invest in gold, because most people think, they can buy gold in the option market. They can buy gold at a coin dealer, or they can trade gold in CFDs. But there's lots of ways that people trade gold. And you have to understand all of the different ways you can trade gold, because all of these do have an effect on the market price. But anyone can start. Investing in gold and silver can be easy, fun, and profitable. Anyone can learn how to start buying gold and silver as a physical store of wealth. Now, there is a difference in investing and trading. And towards the end of this webinar, we're going to talk about trading gold. We're going to look at today's charts. We're going to look at price of gold. We're going to look at support and resistance. We're going to look at where gold should be. But that is for trading gold. There is a big difference. Most people invest in gold. Gold is a great long-term investment. Okay. Now, we're not talking long-term for a lifetime, but it is a very good long-term investment. Somebody who bought gold 20 years ago at $300 now has an asset worth $1,300. That means gold has steadily increased at a very good pace. So if you were putting your retirement money in gold, you would have done quite well. Now, because gold and silver holds its value, this precious metal is both beautiful and a solid long-term investment. However, like any activity, the process of buying, selling, and holding gold and silver involves certain nuances that are important to understand. For example, when you're armed with a baseline of knowledge about gold market trends, different ways to buy gold and silver, values of gold and silver coins, and more, you will be a more informed investor. So below, we're going to find some of the necessary tools to begin to build your expertise. Now, you can trade gold in commodity ETFs. These are exchange-traded funds exist for all three precious metals as of 2009. You'll have to be able to trade the London Stock Exchange to access the one for platinum. ETFs are convenient and liquid means of purchasing and selling gold, silver, and platinum without physically owning them. Then you have common stocks and mutual funds. Shares of precious metal miners are leveraged to price movements in the precious metals. Unless you're aware of how mining stocks are valued, it may be wiser to stick with funds with managers with solid performance records. Because a lot of times you hear people say, I did better by investing in miners. You see the headlines about all the miners in Australia or South Africa. Sometimes you can actually buy into the company who owns the mine. Then you have the futures and options market. The futures and options market offer liquidity and leverage to investors who want to make big bets on metals. The greatest potential profits and losses can be had with derivative products. The best thing about futures, option, and CFD or derivative items is that you don't have to take them across town to sell them. You don't have to store them. You don't have to put them in a vault. You can't misplace them. And they're very liquid. You can turn them back into cash instantaneously. But then you have bullion. You have coins and bars are strictly for those who have a place to put them. Certainly for those who are expecting the worst, bullion is the only option. But for investors with a time horizon, bullion is illiquid and downright bothersome to hold. Because you have to hold it. Where are you going to store it? I remember as they started selling gold coins and you could start buying them. Because for a long time you couldn't own gold. And then they started minting Cougarans. People would buy them up and put them away. Well, of course, it's not a bad idea because any asset is smart to have. But then when they want to turn them into cash, they'd have to find somebody in their town that would buy them, which is usually the coin dealer or the gold dealer. but he wanted a discount rate because he has more Kugelrands in his back room that he knows what to do with. So all of a sudden, something that you thought was worth $1,200, you're only getting $1,100 for because it's the only liquid price you can get. And you only have a handful of places to sell them. So again, putting them in your safe deposit box, you're going to buy them at $300, $500, $1,000, sell them or give them to your grandkids when you retire isn't a bad thing. Owning any type of asset is a smart move. But then you have certificates. Certificates offer investors all the benefit of physical gold ownership minus the hassle of transportation and storage. That said, if you're looking for insurance in a real disaster, certificates are just paper. Don't expect anyone to take them in exchange for anything, but a certificate isn't a bad way if you're not living in a world, a worrisome part of the world. Certificates are based on actual physical gold, but a company stores $1 million worth of gold and they issue a certificate and you own 10 ounces of it, but you don't have to store it and whatever else, but you have to cash in that certificate. But there are many different ways you can get involved in gold trading, but you have to be aware of all of them, because when you think the price of gold is going up and down, you have to look at where it's going up and down and what's being affected. Are minor stocks going up or ETFs falling? Because if you see the price of gold going one way and ETFs are going the other, it might point out to you some inconsistencies or some mistakes that you're doing. Now, there are many common mistakes that unfortunately ordinary people like you and I make when we're trying to invest in gold. Number one, not watching the price of precious metals enough. You need to know when they are going up and when they are going down. Many make the mistake of buying when prices are at the highest, either because they see them growing and purchase immediately, or they don't take into account the oscillations at all. What happens is too many of us start reading headlines and start hearing, gold's going up, gold's going up, gold's going to break 1,300, gold's going to break, and you end up not knowing the price or buying it too high, okay? And you have to watch the price continuously in gold. Gold moves all day long, and it moves very violently sometimes, okay? Now, not looking around to compare prices and buying too expensive a product. Not all investment metal products have the same price. Now, that's the nice thing about CFDs or futures. When you're buying the futures market, you're buying a very specific contract. But otherwise, you have to be careful whether you're buying pure gold, whether you're buying 24 karat gold, 18 karat gold. You have to compare them all. Otherwise, said some sellers sell them at exaggerated high prices. The higher the price, the more you will pay in vain. It's like throwing your money out the window. Take your time to check the spot price of precious metals and compare the price of bullion products sold by various companies. Eventually, you will find an ideal dealer that puts the small percentage on top of its products. Okay. Now, buying scrap gold, scrap silver. Don't just buy anything that's made out to look like precious metals. A lot of people go out and buy necklaces and gold jewelry. They go to Kay's Jeweler in the mall, and they think because they're buying a gold ring that the gold dealer, the store told you for $2,000, that it's worth $2,000 in gold. It isn't. When you take it to the pawn shop and put it on the scale and he offers you $75, you're a little upset. You also don't know if it's solid gold, and it usually isn't. Not that somebody's deceiving you, but this cosmetic jewelry or this people selling gold for jewelry value is a big mistake. This is not investment metals. Okay. Also, buying from unreliable sources increase the risk of fake bullion, so be careful. If you're going to buy the real stuff, buy from a big, reputable, well-known company. Now, also, if you're going to trade gold or invest in gold, make sure you're diversified. Okay, don't just have both small and large pieces of metal. Accumulate various metals. Don't just stay in gold. Buy some silver, buy some platinum. Okay, make sure that you have your portfolio well balanced. Now, also, you want to make sure it's pure. It's best to buy pure gold or pure silver products, not alloys. However, many coins and other products are not pure. Some gold coins are 90% pure, others slightly more. So this is why if you're going to buy bullion as an investment, you have to be sure exactly what you're buying. So that's why buying 99% pure or Cougarans or well-known gold coins, then you're perfectly safe. But there's a big difference between 99% and 99.99% or 99.9%. But be careful because it has an effect on the price of the coin or the bullion you're buying. Okay? And don't get yourself caught up in buying too much precious metals. Diversify. Okay? It's a good idea to buy a couple bits of gold coins and put them away. But buy some certificates and put them away. But don't get head over heels. Okay? Because we love gold. And our love for gold shows no sign of abating. Bullion dealers have sold gold coins, gold bars, and Cougarans by the bucket load, while people have invested in gold ETF funds in record numbers. And ETF funds are virtually a fund that buys gold coins and gold bars and Cougarans. Okay, and there's a billion websites that are all set up to get you to come in and buy gold. Okay, they're not fake. We're not saying they're scams, but the whole idea is to get you to invest. They push the hype. Okay. So be careful. Gold can be very attractive. The question is, which is the best way to make a profit out of gold? So let's make an assumption that you want to trade gold. We're not here tonight because we want to buy gold to put away for our retirement. We're not here because we want to start collecting gold coins to give to our grandchildren. We're here because we want to trade gold and make some profit. So you have three basic choices. You have ETFs, exchange-traded funds, futures, or CFDs. Now, there are a variety of others you can get totally confused, as we have already noted, but you have searched your options, understand what you are, and you want to trade gold. So there have been lately some underlying stabilizations in risk conditions which have curbed further gold demand, although gold is trading quite high, especially with a small increase in bond yields, but there has been further caution ahead of key political risks. Today, we have a key political risk. Does anybody out there know what is happening today that's going to have a definite effect? It's been having an effect on gold. We have two major things going on that have had a big effect on gold. And today we have one of the outcomes. Exactly right. We have the French elections. Okay. Now, we have two elections. Most likely, there's a good chance Marine Le Pen's going to come in today. She's an anti-Eurosceptic, but this will cause, there probably won't be somebody who gets 50% more, so there'll be a runoff May 7th. So we have a week and a half of a big turmoil. And we also have, you guys forgot one big thing out there that's pushed gold up. We have North Korea. Okay. The U.S. involvement, now we have China involved in North Korea. We have we have 3 U.S. citizens being taken prisoner in North Korea. Okay. We don't know how it's going to resolve. We know it's going to get resolved. But when there's geopolitical risk, that also factors into it. So gold has been subjected to trading in choppy sessions in U.S. last Tuesday with a brief slide to 1280. But prices quickly recovered, and they're staying about 1290, which is very high for gold. Gold should have been trading down somewhere about $1,000. We were predicting gold last year to be down at 1,100 and down as low as 980 this time this year. So after trading at a 2017 high of 1295.62 earlier last week, gold prices are now consolidating. The sideways price action allows traders time to plan for the market's next breakout. Technically, traders should note that gold prices are forming an inside bar as seen below. We're looking at charts with prices failing to break out to new highs or lows, because remember, we need to look at to break a new high for gold, we have to break a very important resistance level, and that's 1,300. Okay, it's going to be very hard to break 1,300. Okay, now Wednesday's high is found at about 1292.50 last Wednesday, currently acting as a point of resistance. Traders may look for bullish daily breakouts above this value. Alternatively, Wednesday's low is the found at 1279.03, which is currently acting as a support level. So right now we have a range, a base of 1279, which is a pretty good low, a support level, and really we could say 1300 is the top level resistance. So we have this trading range. Okay. Now, we can expect gold to test other technical support levels. Like I said, it broke the 1292.50 towards the end of the week. Now, intraday gold prices continue to range after testing some support at 1281.22. Now remember, I had to build this webinar a couple days ago to get it approved, and we're also ending a weekend. We're in the end of a weekend here, so we haven't had any trading on Friday and Saturday, Saturday and Sunday, and I had to build the webinar last Wednesday to get it all finished and ready for tonight. So that's the last day's information I had, although we'll look at some live charts in a minute. Okay. This would mean gold prices, we're looking at a resistance level at 1294.69 and 1333 cents. It should be noted that a move to either of these levels would place gold back above yesterday's daily high, suggesting a broader breakout may be occurring. Now, in the event that gold falls further intraday, traders may find the next support levels at about 1293.39 or at 1297.75. So we have an outer range right now of 1293. I'm sorry, we had an outer range of the other day's low at, let's go back, at 1279.03. We have a top resistance of 130033, and we have a middle range at 1293 and 1297. And then we have a bottom range at 1253.17. So we have a pretty broad range of support and resistance levels that's ranging from 1253 to 13003. Okay. Third to a 1273.39 being at a statistical level and 1293.79. So we can bring them in and build a support and resistance level. But we have North Korea involved. North Korea today threatened Trump with blowing his ships out of the water, as the ships will be entering the Sea of Japan in about 48 hours, I think. Okay. Now, the UK last week also played into this craziness when Theresa May called for new elections, shocking everybody because she had been saying no elections. Elections were put off till 2020. The next election were 2020. With Brexit taking 2 years, that would have put the next elections right at the tail end of Brexit. But because she's got so much popular support, she pushed those elections up, and she pulled, and then last week the Parliament approved them. So we're going to have this June 8th election. So by the time we get out of France, we're going to go right into the North Korea mess, and then we're going to go right into the June election. Although May's a shoo-in, okay. She's just trying to strengthen her negotiations as we start the Brexit negotiations. Now, this is also going to have an effect on gold because even though it's 2 years from now, at the minimum, we're going to see lots of people trying to make headlines. Those headlines will have an impact on the price of gold. Okay, so what strategies might we use? Because what we have to do is we have to find points that we might want to grab a good trade in gold. And that's what it is. Now, there are some good strategies out there for trading gold. Okay. And one of them is looking for tight triangles in gold or symmetrical triangles. Fast-moving markets are known to have periods of consolidation after a conclusion of a strong move. So we've just concluded a strong move, and if we can find the formation of a good symmetrical triangle, a breakout could be a very good way to trade gold. These charting patterns occur when levels of support and resistance have been seen converging on our charts. And we're going to see a gold chart in a minute, and we're going to start to see that we actually have some patterns developing. With this in mind, we will further examine the price of gold and identify 2 ways to trade symmetrical triangles. Okay. The first method of trading a symmetrical triangle is to wait for price to break out from its current levels of support and resistance. This can be useful for gold traders that don't have a clear opinion on future market direction. And unfortunately, your clear opinion won't help you that much in trading for profit. You should be looking for leaving your opinions and your emotions behind and looking for clean, clear ways to make trades. Okay. So traders can trade a breakout in either direction by setting up an OCO order. Traders can plan to sell a break of support and trade the pair to new lows under 1293. So 1293 could be a significant point to get a low under to trade gold. Okay. At the same time, traders can look to buy gold at a price break above resistance on a breakout trade to a new high above 1298. In the event that price moves back inside the triangle, stop orders can be placed on both entries in the center of the triangle pattern to limit risk exposure in the event of a false breakout. Method 2 would be almost the opposite. The second method of trading a triangle is a simple strategy designed to trade between the outlined levels of support and resistance that make up your charting pattern. Again, using our example of gold, this time pictured on a 4-hour chart, we can see price approaching the upper boundary, and these are current price movements. These are current, Okay. Now, traders looking to trade the interior of a triangle may consider selling entries to sell gold at this point. Likewise, if price dips to support, traders can repeat the process and set entries to buy. So rule of thumb, regardless of where price action ends up on gold, identifying a symmetrical triangle can allow traders to choose from a variety of trading strategies. Remember, the key for trading triangles is first identify levels of support and resistance. Then traders can set up their risk and manage positions. So let's go take a look at today's chart. So let me pop it up on your screen. And so we can see gold right now. This is a live chart. And we can see gold right now on the daily chart is trading above the 200-day moving average. We can see gold is holding right now or closed on Friday at 1284. Okay. Now, we have a trading channel, a beautiful trading channel moving up. We have a breakout. We can see that gold has gone. Let me just get my marker on here for you. We can see gold fell to the support level, bounced back. Oh, hold on, let me clean this up right for you here. Okay, we see gold fell down to the support level, bounced back up to the resistance level, fell back to support, bounced back to resistance, fell back to support. So we're expecting gold to bounce back up to the resistance level. So we could bounce as high as 1310. Now remember, we have gold currently moving in an uptrend. So when we're moving in an uptrend, we would expect to trade, we would only trade with the trend line, so we would trade gold to go up, because we would not trade it off the bounce off the resistance line, because you don't sell in an uptrend. Okay. Now, we also can see that right now, let me get my markers up here so you can see a little better. We can see on our Fibonacci levels that gold is sitting right here on the perfect Fibonacci level at a Fibonacci retracement at 61.8 level. Okay. And gold is likely to hit or above or go above 1300. So we might consider taking a buy move off of this bounce here with a take profit point at a realistic point would be at 1300 if it were to break through at 1300, and a stop loss maybe at 1260, at 1270, or at 1280, depending on what you can afford. But this would give you a nice little round trip of 16 points, okay, to get out of gold at 13, because we know 1333 is a strong resistance level. But what we can see is we have our beautiful uptrend here in gold, recovery here. We see gold bounce, started on the Fibonacci levels. We see it moving up here. And we have our 200-day moving average line here, and gold is staying well above that. So we have a good opportunity in gold, okay, which could be predicted because we're going to have the election results. Actually, we might have election results. 7 o'clock UK time, just passed. We should have election results coming out as we're talking right now. And so after that's filtered out of the market, we're going to watch the North Korean stuff, and that should keep gold moving up this week. Okay, so this might be a very good opportunity for a look tomorrow morning or a look today. But this should be a very viable trade. Okay, and it's not a short-term trade. I mean, it may take a week to get up there, but it could be a good entry point, and then we can sit back and carefully watch this moving along. Okay, somebody just told me Macron is in the lead at 23.7, Le Pen with 21.7. Neither one is going to hit the 50%. Both will probably be in the runoff. I would like to see Le Pen way behind him at the close. I'm a little bit scared of Miss Le Pen. She's a little bit too crazy for me, but that's my personal view. And I'm a centralist. I like things to kind of stay the way they are. So we have this move right now. So this offers some opportunities. So let's go back to my PowerPoint. Let's talk a few minutes longer, and then we're going to wrap up tonight's class. So let me pop up my PowerPoint here for us. So remember, regardless of where price action ends up on gold, identifying or looking for a triangle, and when I say triangle, we include asymmetrical, symmetrical triangles, we include rectangles, we include wedges, and we include channels, all within that area of triangles, because all it is doing is predicting pent-up movement of price. And we have a classic right now we have a classic channel moving on in gold. I mean, it couldn't be any more pretty perfect than what it is. So keep an eye there, look for your position, but remember, manage your risk. Okay? Make sure your risk and your profit are well balanced, because don't just concern yourself with profit. Concern yourself with the risk involved in making that profit. But some short CFD trades in gold might be a good option at the moment. So go to www.trade12.com, open up even just a demo account, set them up and try them in demos, see how you do on this, or put some money in there and take advantage of Trade 12. Thank you very much for joining us tonight. Have a great weekend, and good luck trading gold, and watch everything that's going on out there, and have a good night. Thank you very much.